of statutory reports by banks to the Reserve Bank of India from reporting every Friday, to the last day of the fortnight, month, or the quarter. So this change will ensure consistency in reporting, sir, and that will make it easier for even those who want to observe the Indian economy or the way in which banks follow statutory reporting. So that is the second of the 7 highlights that I want to say of the total 19 amendments that we are bringing now. So then the third of the amendments to the Banking Regulation Act is extending the tenure of the directors, excluding those of the chairman and the whole-time directors in cooperative banks from 8 years to 10 years. So then the fourth amendment to the Banking Regulation Act, there are 12 amendments only to the Banking Regulation Act, but I'm highlighting some of them. So the fourth one is the amendment to Section 5 of the Banking Regulation Act 1949, which will redefine substantial interest. The expression substantial interest is getting redefined. The threshold for shareholding of a substantial interest will be increased from 5 lakh rupees to 2 crore rupees, reflecting the present value as the same as was last fixed in 1968. The fifth of the Banking Regulation Amendment Act, sir, I already mentioned that there are total of 19 amendments that we are coming along with now, and of the 19, 12 pertain to the Banking Regulation Act. So the fifth one is amendment to subsection 3 of the section 16 of the Banking Regulation Act to allow a director of a central cooperative bank to serve on the board of a state cooperative bank. Normally, sir, in bank, when you appoint directors, they can hold the position of a director only in one institution and not in more. However, the cooperative bank structure, unless a person is elected to one layer of the cooperative, they can't get into the next layer, and as a result, they will necessarily have to hold position in more than one place. So we're making the Banking Regulation Act consistent with that provision so that they are in alignment with the cooperatives that are in banking area. Obviously, I would like to mention for clarification's sake through you, sir, to the Honorable House, that when we are touching matters related to cooperative acts, I think that's very important for me to clarify right at the beginning, that it is only the banking aspects of cooperatives, those cooperatives which are functioning as bank as well, only in their banking activity are these amendments going to come into play once the House passes it. The other activities of the cooperatives, like primary agriculture society, cooperative society, and so on, we have nothing at all to do with these amendments. They are cooperative activities, but we're looking at the banking activities. So, amendment to subsection C3 of the 16th, section 16 is for allowing a director in the Central Cooperative Bank to serve on the board of a state cooperative bank as well. Sir, the State Bank of India Act has 2 amendments. Of that, one of which I like to highlight here as an opening remark is amendment to Section 41 of the State Bank of India Act 1955 and the Section 10 of the Banking Companies Acquisition and Transfer Undertakings 1980 Act will provide public sector banks with the discretion in determining the remuneration of auditors. This measure aims to improve the quality of audits by giving banks the opportunity to attract the best talent in the market and aligning compensation with the financial capacity of the banks. So these are the proposed amendments. I've highlighted some of them. There are 19 of them. They pertain to at least 5 of the major acts, sir.
Okay, that's the Finance Minister addressing the Parliament right now. Let's just quickly take stock of what the market has been up to. It's been banks all the way which are lifting the markets up. Look at the way the Nifty Bank has shot up, led, of course, single-handedly by HDFC Bank. That stock, of course, at record high levels. It's above that 1830 odd level in trade. And by the way, the market cap as well has managed to cross that 14 lakh crore rupee mark. Other than that, of course, it's only Reliance and TCS which are ahead in that sense in the queue for HDFC Bank's market cap positioning. But let's welcome on board Ajay Vora as well and find out what is it that he's making of the market temperament and the landscape right now. Ajay, hi, afternoon. Good to have you on the show. Does it seem like all that pain from September to October is now behind us? Can we confidently say that?
Yeah, so I think hi, good afternoon, and thanks for having me on the show. So I think in the medium term, at least it looks like, because, after a fairly long time, we have had a correction which is more earnings downgrade led, and we have seen almost at an aggregate level, I would say around 10% downgrade, and to that extent we have seen closer to similar correction in the markets. But I think considering what we are going through right now as well, consumption was anyways lagging, and now the government capex is also on a decline. So I think we need to stay really agile in terms of how the earnings shape up from here on, because I think going forward the expectations which are built into the market are still of around 14-15% growth. So in case if we see further downgrade, then maybe we can see one leg down more going forward. But I think till the time further clarity emerges, I think we'll be in a range anywhere between 23,000 to 25,000 in that 10% kind of a range.
Ajay, the problem for the market was rich valuations and growth. Have both those problems got addressed? Because valuations are just about okay, and growth is genuinely slowing down.
Yeah, so Nikun, the point is that still there is a hope that from this year, say 5-6% growth, we'll move back to 14-15% growth next year, and therefore I think the valuations are still, I would say, a little bit on the higher side, because if you look at the Nifty aggregate EPS number, that has been moved forward by 1 year. So what we were expecting earlier to happen in FY25 is now actually getting translated into FY26. And therefore, if you look at those numbers based on 1200 rupees EPS, we are still trading at around 20 times. So I would say you are right that growth has come off, but I think the valuation premium is still there. That is mainly because of a hope that earnings will recover.
So let's look at some spots where there is a bit of a shakeout, and the number one space where shakeout has happened is PSUs. From PSU banks to railways to defense, just about everything and anything in PSU has seen a deep correction of 15 to 30%. Now everyone told us that the leadership of a bull market never changes. So if PSUs are the real leader of this bull market, is it time to buy those leadership stocks again?
So Nikun, again over there, if you see for last 3 years or so, the key driving force was the government capex, which led to a significant, I would say, stimulus to the overall economy. And as we all know that in the first half, because of either heavy monsoon or the election period, the government capex is almost on a decline year on year. So therefore, that is getting reflected in most of the PSU sectors. Now my sense is that we will stick to those budgeted numbers, and therefore 11 trillion rupees which the government has allocated towards capital expenditure, if that gets met in the second half, then I think we can again see some sort of pickup in overall ordering and execution from the PSU companies, and therefore you can again see some sort of leg up. But as I said that there is a lot of uncertainty right now in terms of how the government is looking of in terms of spending money. And that is the key, I would say, the driving force. And along with that, if you look at how RBI is also going to act, because from a lot of companies that we talk to, it seems that there is a serious shortage of liquidity at the ground level. So my sense is that we already had cuts from Fed, two of them. Now we need to see some sort of action from RBI. So a mix of both RBI as well as government action will actually give some respite to the markets and especially the PSU sectors.
Ajay, can't get your eyes off HDFC Bank, can you? I mean, the market cap has now reached those, high and mighties of Reliance and TCS as well. And I was just looking at the 6-month performance. It's only ICICI Bank and HDFC Bank which have actually managed to perform well. I'm seeing an Axis Bank which is actually down 5% in the last 6 months, the stock performance that is, and SBI also down about roughly 6% or so. Where is it that you're finding comfort within the banking space right now to put fresh money to work?
No, I think so. Overall, banking space is looking, I would say, reasonably attractive because when if you look at last 2 years, banking has been an underperformer because you are getting growth in many other sectors. Now, relative to all other sectors, banking is still stable, and most importantly, the valuations are below mean, and therefore you are seeing some sort of interest in HDFC Bank or SBI. Because I think that eventually when growth starts to collapse, people would look for safety, and the safe net is available at reasonable valuation, and therefore you are seeing some sort of outperformance over there. So I think the overall banking space, private as well as public, is looking interesting even from here on.
Right. Okay, Ajay, great to have you on the show. Thanks for taking the time out and speaking with us today.
Thanks a lot.
Okay, that's a quick take on the market, but let's try and understand what exactly is happening with MapMy India. What we understand is that the promoter has floated a new venture which is going to focus on the B2C business. Of course, there are many nitty-gritties to this. So let's try and understand that and a lot more. Rakesh Verma, the co-founder and chairman and MD of the company, join in. We also have Rohan Verma, the CEO and executive director at MapMy India, on the show with us. Gentlemen, both of you, thanks so much for taking the time out and joining in. Rakesh, why is the consumer business not a part of the listed MapMy India entity? And if you're so bullish on it, then why only a 10% stake?
First, let me correct. Promoters are not floating a new company. Rohan Verma is floating a company.
Okay. So I should direct the question to Rohan Verma. Rohan, you go then.
Okay. Number two is, if we are so bullish on the consumer business, then why should we have tried to do what you're asking? We may be bullish, we may be feeling good about it, but MapMy India has been experimenting for the last 9 months about the opportunities of the consumer business. It became loud and clear that the impact of the consumer business for years to come, maybe 1 year, maybe 4 years, I don't know, the impact of it on our profitability and margin would be so drastically hit that, and further, in any case, MapMy India's business has never been a B2C business or a consumer business. It's an initiative that Rohan feels very good about it. He's committed to it. So we accepted his request that, okay, do it outside the company. You can ask more from Rohan.
Rohan, what would be the relationship of MapMy India and your new venture? I mean, nobody stops anybody from starting a new venture. Where markets are perhaps trying to seek some understanding is that, will the funding of this new venture be done by the existing equity structure of MapMy India?
Sure. Thanks, Nikunj, for having me. So MapMy India will get a 10% equity stake in this company. The board had approved a CCD of 35 crores to invest into this new company. But since we've been hearing feedback, inputs, concerns around that, to allay the concerns of minority investors, I've said that I'll not be taking the CCD of 35 crores from MapMy India. I'll put in my own funds to run this consumer business. And also, just to kind of say how this will help, is basically MapMy India is a successful, growing, profitable B2B and B2B2C company. Now, this consumer business will help showcase the MapMy India's maps and technologies through the consumer app. So the CCD relationship, I'm not going to be taking forward to allay the concern of minority investors and be doing this outside.
Rohan, let's look at the other side. You understand this business. You've incubated a very successful business. And I've seen promoters sometimes, when they take decisions, they get bullied by the market in the short term. But in the long term, I've realized those decisions, they pay off. And I'm just bringing some points here for benefit of our viewers. When Zomato acquired Blinkist, everybody booed it. And that has turned out to be the cash engine, at least for Zomato. So if you're so confident that you understand this business, then why not go ahead with it? I mean, you have the right to do it, and all companies would like to diversify. And if this business venture does well, then I'm sure eventually the minority shareholders of MapMyIndia will also be happy and they'll say thank you. Why are you taking it back?
I can say a little bit, and then Mr. Verma can add, overall from MapMedia's perspective. I'll say that the feedback that we've been getting last few earnings calls and from investors is that, look, MapMedia has always been, is well known as, came to the public markets also as a B2B company, which is profitable. Why add this additional investment in this area of consumer when in any case we're investing on the B2B side in IoT and drones? We've set up a joint venture in Southeast Asia. So I think there's a lot happening in the company and all for the good. They're pretty large addressable markets that the company has, where the company is focused and is already profitable in. So for all those reasons, sometimes you just can't do too many things at the same time. And that's at least this is my perspective. Mr. Verma can add his own perspective.
Mr. Verma, so this is the fact that there will be no investment which would be done in terms of diversification or incubating new businesses. Can I say that MapMyIndia will remain the original MapMyIndia, and in future also no new ventures will be incubated?
Incubation we have been doing historically. And as part of that incubation, if you look at any IIT Kanpur or other IITs, they do incubate. And after incubating, they hand it over to the people who would like to run it. In this case, Rohan has a great desire to get into the consumer business. But now what the market is talking about, and the thing I'm talking about related to Zomato also, is not a very good example, Nipun, because MapMyIndia has been historically a profitable company. Zomato has not been a profitable company. And for MapMyIndia to go from profitable to loss-making company, in my wisdom and in the wisdom of the board, we felt that no investors would like to see that kind of a situation.
Rohan, so just wanted to understand a little bit about the business. People are also wondering why the new entity is using the CE Infosystems brand Mapples. I mean, is there a royalty link here?
See, the way Mapples, we've built it up from a consumer point of view in the last couple of years only. And this is attempting to take on the big giant, Mr. Google Maps, on the consumer side, plus a bunch of more things which will help consumers in India benefit. So the way the business arrangement is that Mapples brand will be used for this consumer by the company. And also the MapMyIndia will get the benefit of the anonymized data that will come from the app that will help freshen up MapMyIndia's maps or update it, enhance it. And we know that, fundamentally, what is the business benefit to MapMyIndia? The more people that use this Mapples app, the more they'll see that, look, the best maps and technology are powering this app that could also power other good consumer apps or other good enterprise solutions, all go built into cars. And the second part being, the more people that use this app, the data from that is anonymized can be used to enhance points of interest, road information, traffic information, places information, so that MapMyIndia's maps become better. Plus, there is a 10% equity stake that MapMyIndia is getting already at the get-go in this company. I think that's a pretty fair benefit that is accruing to MapMyIndia for not, kind of taking on the P&L hit, let's say, for the foreseeable future or investing in such kind of business.
So I'll wrap it up with one final question, Mr. Verma. The stock is down 8%. And you've allied the concerns. So that means all the concerns which were there about unnecessary diversification, which markets and shareholders they tend to think, at least you are firmly giving this commitment in terms of where the future of MapMyIndia is headed in terms of the original business. So can I say that that's a message which needs to go to your shareholders?
Absolutely. not only that, MapMindia's it's not original business is going. Original business had couple of basic facts. One, the 1,000 crore revenue that we are targeting for FY28 stands. Stands. Consumer business was never considered as part of that 1,000 crore. The profitability margin historically we have been getting at 40%, and that's what was getting adversely affected in the last quarters. So the message, and MapMindia is not putting in any, will not put at the request of Rohan Verma, which board had approved, about the CCD money of 35 crores. That should allay the fears of the minority shareholders that what is this? MapMindia is putting in money into a company and just getting a 10% stake.
All right, gentlemen, Vermaji and Vermaji, that's what I can say. Thank you very much. Thank you for joining us on ET Now.
Thanks, Nikunj.
Thank you.
Thanks.
PNB, 2.5% higher, 107 rupees for PNB. It's turning out to be a good day for banks. And if you really cut across the breadth in terms of the weft and the space of the, weave and the weft of the market, I think the breadth has been the talking point. Adani group of stocks, you've got Adani Ports, which is trending up smartly. But for me, the real big one is NTPC Green. I just popped up on my screen, 10% locked up. That's Adani Ports for you. But before we take a break, you want to see Adani Green. No stunning debut, very lukewarm debut. But a new buyer has come back, and the new buyer is just saying hello, because 10% up for NTPC Green, I think that's a giant leap, so to speak, by any stretch of imagination for a company which just went public 7-8 days ago and never got a great response. Let's take a break. Adani Green is turning out to be the story this afternoon. All right, in conversation with our technical experts, we've got Kunal who just joins us, and then we've got Vaishali Parekh. Kunal, I was looking and leaning towards my right to see kahan ho, and then I suddenly realized you're in front of me. Weren't you there in the morning with us?
Yeah, Nikunj, I had some urgent work, so that's why I had to leave.
Okay, I'm glad you could join us. Okay, Kunal, 176 points higher. We are in for a good day. Yesterday we corrected and then closed at the highest point of the day. Today we've picked up from yesterday's close and we've managed to build on it, which means that from yesterday's lows to today's close, which is where we are headed, I think it's a very good comeback by the bulls.
Yeah, it's a very good comeback when you look at the indices. Nifty is good, 175 points plus. What I like about the markets today is the outperformance, which has come back again from the banking index. So Bank Nifty up some 600 plus points. I think gives a clear indication that the mood for the markets would probably be dependent on how the Bank Nifty and the banking stocks perform. We've broken past above a mild resistance for the Bank Nifty, which is 52,500. That could, I think, be a crucial point. So say over the next 1 or 2 days, if you manage to hold on to 52,500 for the Bank Nifty, then lot many private sector banking stocks which have been underperformers, they would start to get back into a breakout mode. Even the PSU banking lot, which has been a bit of a on and off kind of a sector or within the banking index in terms of momentum, even those stocks and those spaces would start to get into a rally mode. So I think overall, I believe that the market mood now depends majorly on the Bank Nifty, which on a near-term support is at 52,500 plus levels.
Right, okay, that's that right now in trade. But Vaishali, hi, afternoon. Have to talk about the way the Nifty Bank is powering ahead, led by, of course, HDFC Bank. And today, of course, the 6-month underperformers like Axis, SBI as well are participating in. What's looking good to trade within banks right now to you?
Very good afternoon, all of you. Yes, so I would say yes, the frontline private sector banks are doing good, but my focus is also on the PSU banks. I mean, especially if you look at Punjab National Bank today, SBI, they are also doing very well, and the PSU banking index on the whole is showing signs of revival. So along with, ICICI and all, they've always been doing good and they are still continuing to do good. But I think this would definitely give a favorable risk-reward ratio.
Kunal, HDFC Bank looking strong, ICICI Bank looking strong, Axis seems to be joining the party. I think yesterday we were discussing that you were of the view that the Bank Nifty could give a 1,000-point rally. Is it time to change the target to 2,000 or even 2,500 before the year ends?
Yeah, I'll gladly do that, Nikunj. If you see maybe one more leg of up move from the top two, heavy-weighted banking names. So in fact, HDFC Bank today has managed to come back to 1830 plus levels. ICICI Bank is coming back towards 1310, 1320 range, which is, these are all breakout ranges for both of these stocks. So I believe that the first part of the move of 500 points which we were discussing yesterday, I think that's happened on the basis of these large cap private sector banks making a comeback. Now, if in the next 500 points, if we see these stocks gaining further momentum, then of course we could be looking at a further up move for the banking stocks. So I think what matters over here now is the kind of momentum which we've seen into these two private sector banking names, that trickling to the other stocks also.
Interesting. Well, banks really it has been all the way. But Kunal, you were also talking about strength within IT, right? And today, of course, it's KPIT Tech, Tata Elxsi. These are the ones which are holding out. But you were making the point earlier today that you actually see large cap IT names also play catch up.
Yeah, so I think the IT stocks, they've started to do pretty well for themselves. My sense is that maybe these IT stocks will have one more leg on the upside. Large cap IT stocks is where I want to bet.
I can hear drum beat. कोई शादी वादी में जा रहे हो? कुणाल? पीछे आवाज आ रही है. I mean, is it like some getting ready to dance in a barat? Sir, again, it's drum beat I can hear. Where are you, Kunal? Audio is gone now. Doesn't matter. Okay. Then Kunal, can you hear me? I'm saying that I can hear a lot of drum beats. So is it you are at a place where you're getting ready to go for the barat? मैं तेरे को बोल रहा हूँ जब नहीं. Okay. Bit of a hodgepodge here happening, guys. Please pardon me. I thought Kunal could hear me. That drum beat and all got lost. So I was trying to just find out where he is.
Yeah, but
so
no drum beats at Vaishali's. So let's take that conversation forward with her. Just looking at some of the laggards today, ITC, of course, there is that talk about, and we should try and bring up our reporters link as well and tell you what is it that we are picking up, that perhaps the GST panel may be looking at taxing or rather upping the tax now on tobacco and tobacco-related products. So, the key hit would come in on ITC, considering the largest portion of their revenues does come from their cigarettes business, other than, of course, hotels and FMCG. ITC, of course, has been quite tempered today. 472 is where the stock is, and that's a downtick of about 1% that you're seeing on ITC. Other than that, there's Unilever, Asian Paints, even a trend for that matter, that's down about almost 0.5% or so. Vaishali, what trade do you see on ITC, and do you sense that there could be some more pressure in the days to come too?
Don't think so, because it was even in spite of this news, there was hardly any impact. So technically, I would say 450 really acts as a very good support. And still, even in spite of today's news, I think it's still in the process of making a higher bottom. And today's low, if that is respected, I think it's going to be back on track. 485 would be the resistance. Once it crosses 485, we are looking at 500, 520. So let's wait and watch. Today's low is very important that we need to look at.
Anand joined us now. Anand, it's been a smart recovery to say the least. 8-10 days ago, there was a bit of a mid-air turbulence. Chins were down, momentum had broken. We were hit by money moving from India to China. Everybody was trying to reconcile with victory of Donald Trump and what it meant for the world. And if that was not enough, you had a big sell-off in Adani group of stocks. Despite the odds being against us, markets have made a decent comeback, Anand.
Yes, the market has obviously shown a lot of resilience, and in fact, I would argue that the correction that we had, which is now being kind of eaten away, is actually more a question of the earnings itself coming down, because after the second quarter earnings, the results, by and large, I think analysts will have to bring down estimates for the consumer sector, if not more. And that will overall bring down the EPS estimates for the year, which means that the correction is more or less aligned with just about the earnings downgrade that is likely to happen, which means the market is back to where it was to its previous stretched valuations. While it may be good for the market in terms of the fact that it shows that there is still a lot of belief in the system about where the market is headed. The reality is that I think the market is now running ahead of itself, has been for a while. But now, given the fact that we have evidence to show that there is a slowdown in the economy, you are perhaps even for taking into account, kind of optimism that may not be warranted.
Right. Okay. Let's just take a short detour. And Indigo, it seems, has filed a lawsuit against Mahindra Electric Automobile over the use of 6E in its new electric vehicle, the BE6E, that is. Sumit is here to tell us more about this new corporate fight or India Inc. fight, which is currently brewing. Sumit?
Well, Indigo has today filed a court case against Mahindra for using 6E. Well, in 2015, Indigo came up with the 6E call sign, which is it is using not just for call sign, but for all the selling and marketing purposes. Now, Mahindra came up with an electric vehicle last week, calling it BE6E. So the fight is on this patented trademark thing, 6E. Now the case has been forwarded to on 6th of December. The further hearing will happen. However, sources are telling us that Mahindra has reached out to Indigo for some kind of patch-up. However, it is not clear whether they're agreeing to it or not. Well, both of the companies are of the view that 6E is their... Well, Indigo is of the view that 6E is their patented brand name, so nobody or no company should be allowed to use this. So that's a particular thing on which Indigo has dragged Mahindra to court and has sued the company.
All about branding and brand recall, and 6E is something that Indigo stakes claim was their innovation. But let's try and understand why Granules India is one stock which has been in a bit of a free fall zone. Quite a bit of crack coming in on Granules. Not the 52-week chart, that won't be pertinent, but if we can just bring up the intraday chart today. The company, of course, had informed that US FDA has classified the inspection at its Hyderabad facility as an official action indicated. Let me take it across to Varun and find out what exactly transpired. And Varun, now I can see the stock is cracked 10.5%.
So it has cracked 10.5% because the company's Gagillapur facility has been, classified as official action indicated by US FDA. Let me remind that the inspection of this facility was taken over in the month of August and September, and in the month of September, actually US FDA has given Form 483 with 6 observations. The observations were related to cleaning, maintenance, inadequate root cause analysis, procedures, and on which the analysts were expecting that a company would come out with some remedy against these 6 observations. But now the unit has been classified as official action indicated. Now there is a problem. The company says that the company is working with US FDA to get all the clearance, but till now it looks like there is no respite for the company. This facility within itself is very important because it supports the global operations of Granules, and more than 50% of company's revenue comes from this facility. In fact, if you look at the overall formulation capacity, it is higher than other 3 facilities combined for this company. So this is the importance of this facility, and also this company supports the global operations, and it supports the company's finished dosage and pharmaceutical formulation intermediaries. Also in Q2, if you look, because of this pause, the company has to take a hit on its overall financials. So it was an important facility. Analysts were expecting that it would get clearance, but now if an official action indicated is given to this facility, then definitely it's not good for the company, and hence you're seeing after this news, the stock is cracking because this facility contributes more than 50% of company's revenue.
Free fall and now hitting lower by 11%, and the fall is coming on big set of volumes as well. But before we take a short break, we at Times Network are back with our flagship event, India Economic Conclave, presented by IDFC First Bank, which has been the epicenter of igniting the right conversations pertaining to India's growth. The 10th edition of India Economic Conclave, through its aspirational theme, fast-tracked to the top 3, will be charting a roadmap on how India can accelerate its ascent to becoming the 3rd largest economy in the world. IEC will feature the biggest policy makers, global voices, economists and corporate honchos. Tune in to the Times Network to witness all the action live on the 12th and 13th of December. Back with closing trades right here on ET now. Well, the market, of course, is scaling up to the day's highs. There you go. The consolidated revenues for Swiggy, the first earnings reportage post its numbers. It's almost a 12% uptick on a sequential basis that they've seen. 3,600 crore rupees in terms of their revenue. Brokerages were working with a figure of about 3562 thereabouts. So that looks like it's pretty much as per target. The consolidated loss has come in at 625 crore rupees, which is not much of an uptick on a sequential basis. What we were anticipating was we were expecting a 476 kind of loss. So the loss hasn't really come down in that sense. And I guess that's what is acting a little bit on the stock right now, because remember, the stock went in strong into its earnings. Of course, would be curious to see whether there is what they deliver in terms of the quick commerce numbers, because that's where all the fight and the margin seem to be. We were expecting the GOV uptick of about almost 15% and the gross take rate at about 15.5%. Let's see what they deliver, because going by the profit, or rather here in this case the consolidated loss figure, that's definitely lower than what the market was anticipating, because the market was anticipating the loss to come in much lower than what they've actually reported, which is what is reacting sharply, I guess, on the numbers. Nikunj?
Aisha, I'll wait for ESOPs. I'll tell you why. Because when you look at those, there is a big, they've gone public. In that, how much at the operating level, because once you charge for ESOP, it comes in the net number. So for me, I think the EBITDA number is important. For me, there are a lot of other ESOP adjustments which I expect, because they went public, so you don't know what ESOP policy they followed. You cannot jump into a conclusive, immediate conclusion looking at these numbers. They may not be that impressive. That is what the headline numbers are indicating. But is this largely because of ESOP, or there is an operational challenge there? Because these numbers in a sense are not going to have an impact on the stock per se, because markets are expecting that, okay, you've gone public and there would be series of events, series of surprises which will come from Swiggy. But if there is no ESOP and these are operationally subdued numbers, that means there is no marked recovery. Because if consolidated revenue is up 11% and if consolidated losses have gone up, so you're not expanding your losses, but you're also not contracting your losses, which is what Zomato did, which is what really got them this pedestal positioning. So I'll wait. I think we'll get 2 or 3 minutes.
Losses come in at 554 crore rupees, which is also flattish on a sequential basis.
There is no improvement, no, Aisha. So
Yeah.
then we are saying that, look, whatever changes they've done, and ESOP is above EBITDA, is below EBITDA, so that means EBITDA is operational, which clearly means that there is no marked improvement in terms of the profitability. Now, is it quick commerce? Is it because there was a slowdown which happened largely in and around, what regions they've been servicing? I don't know yet, but these numbers will not really excite a lot of market men, considering that this is the first one from Swiggy where after the IPO, and on the heels of what Zomato has just done in terms of a capital raise. Anand, there was only Zomato, and now it is Swiggy and Zomato. And this good old comparison of who's better, which is a better franchise, I think this would be like a good old comparison which would be there for decades now.
So, I think the two of them have slightly different business models. So far, Swiggy is trying to be the single app for everything. Zomato has two different streams. There is also the fact that Zomato seems to have better execution at this stage. So Swiggy has a lot of catch up to do. And that will obviously mean that you cannot be worried about the profitability too much unless you are, while you are losing, unless you are able to establish a much higher market share and growth rate than Zomato is. So it is a catch-up problem for Swiggy. It's a fight between two fairly large companies now. And, it's a very tough business because your execution margins are not very high. Each transaction will cost you a lot to deliver, and yet you have to make money on it. So I think, if you really have to look at how it pans out, you have to give it a slightly longer time frame. It's only when it is listed you can begin to see the parameters that work. But for now, as you said, the preliminary numbers don't look all that exciting, at least as far as the operational profitability is concerned.
Anand, where have you been shopping in this market? This market did give a dip. To be fair, 10% plus on the index, 20% plus in mid cap, 30% plus in small cap.
Sorry, did you ask me where have I been shorting?
No, shopping in this market.
Okay. Well, I mean, frankly, the only place where valuations are somewhat comfortable has been the banking sector, and that to the private sector banks is what I've been focusing on. So I think that's been the obvious play. It continues to remain relatively better, and of course, the lower valuations has slowly moved away because HDFC is no longer as attractive as it was a while back. But even then, it has somewhat underperformed the market in terms of its growth. The other areas that are still have actually done badly have been insurance, for example. This year has not been a great year for insurance companies, and that remains to me one of the more attractive sectors in the financial space with a somewhat longish runway. The usual places which most people have been looking at, which has been the PSUs, defense, and the new technology companies. As I said, the new technology companies, I would rather wait to see how the execution goes through. I think there's too much euphoria perhaps in some of the new renewables. I still have to figure out where the value is. Obviously, the renewable installation players are something that one can look at. And, one has been doing some bit of that. But the utilities itself, the fact that they have gone at some humongous levels is something that baffles me because, the numbers that they will generate is not going to be anything exciting in terms of ROE. So there are, it's been a difficult call to figure out, where you're looking at, but largely it is to try and find places within the renewable space, within the defense space, which are slightly off from the main line.
Okay, some more nitty-gritties coming in from those Swiggy numbers. We, of course, have the quick commerce numbers there, and that's definitely seen a sequential uptick of 30%. But I guess what the street is not liking is this sizable investment that they're making in the logistics business. That's Scootsie Logistics, and that's a company which Swiggy long back had acquired. So I guess that is what is not going down well with the street. And you can see the Swiggy intraday graph, if we can just bring that stock, because it went in strong into its numbers. Post the first flash, it was up 1%. It had come off from the top of the day. Then it went up again about almost 2%. And now you're seeing it drift back into the red. We're going to have Snehi, who tracks this company closely, join in to get us more details about what exactly this new investment in the logistics business is, because I think that is what has got the street a little bit alarmed. Snehi, what more can you tell us about the numbers?
Well, absolutely. So overall, our first take on the numbers is it's looking quite weak coming in for Swiggy because you have revenue that's come in at 3,601 crores compared to 3,222 crores, which is up 11.8% on a sequential basis. Revenue is largely in line with what we were expecting. However, if you take a look at net loss, that has widened at 625.5 crores compared to 611 crores. We were expecting this amount to go down. It is significantly more than what we were estimating. This amount is be at 476.6 crores. Even EBITDA loss has come in at 554 crores compared to 544 crores on a sequential basis. We were expecting this number to be lesser on a sequential basis. However, this is widened and we were expecting 462.5 crores. So it has beaten our estimate also in a much negative way because the loss has widened. Now, if you take a look at some other segmental performance, food delivery revenue has gone up by 3.9% sequentially. Out of home consumption revenue has come in at 59 crores, which is up roughly 29% on a sequential basis. So that's looking good. The quick commerce business revenue has come in at 490 crores compared to 374 crores, which is an uptick of 31% sequentially. Food delivery net profit has come in at 122 crores compared to 67.4%, which is up 81% on a sequential basis. So food delivery is looking good. However, you have quick commerce that has not performed very well in the quarter gone by because you have the quick commerce net loss has also widened, coming in at 307.2 crore rupees compared to 280.2 crores on a sequential basis. Now, however, they have made some other announcements as well. They've invested equity shares of Scooty Logistics Private Limited up to an amount not exceeding 1600 crore rupees. So they've made an investment in their subsidiary of Scootsie as well. Remember, this was one of their first acquisitions and Scootsie is their e-commerce branch. Also, they've incorporated a wholly owned subsidiary of the company for sports activities and amusement and recreation activities. So this subsidiary is also going to be catered to that. But if you take a look at the overall fine print, it's looking like a very weak set of numbers coming in for Swiggy for quarter 2.
Now, what do we have? We have a consolidated loss. The food delivery business, and Sneh, if you're there, I'm just trying to dissect the numbers here, Sneh. The food delivery business is profitable, which means the mainstay, which is the food delivery, they've managed to turn the corner there. The problem is that in the quick commerce business, which is the high growth business, which has re-rated Zomato because of their Blinkit acquisition, I think is in loss, and that's where they are burning. Because if the quick commerce revenue is up 30%, and if the losses are there, despite the fact that there is at EBITDA level, despite the fact that there is a profit in the food delivery business, that means you are losing money in quick commerce. And quick commerce is where competition will intensify. Quick commerce is where some of these companies now will have to face the heat of Flipkart and Tatas and everybody else. So imagine in the business where you're growing, you'll have to get ready to fight, and you don't have that kind of an ammunition, because you are now looking at investing 1,300 crores in another business, which could be an allied business called Swiggy Logistics. So this is where I think the sequence of event is something which is bothering market. 4 minutes to go. I'll turn my attention back to the markets now, because Swiggy and Zomato and Swiggy both, they remain the center of attraction from a curiosity standpoint and from a participation standpoint. What is catching my eye, however, is once again HDFC Bank. And Anand, for a stock which could do no wrong, it has had 3 years of hibernation. Has HDFC Bank gone through its painful share of 3-year consolidation and is now getting ready for a giant leap?
Well, I don't know about giant, but clearly, this was a problem that you could not grow enough. And therefore, relatively, it was, underperforming its peers, which were growing fast enough, because of the fact that they did not have, their credit deposit ratio was way out of whack. It has been corrected, but I think the period of slow growth will still continue for a while. The only thing is, relatively now it doesn't look so bad, because the overall credit growth itself in the industry has come down to 13%. So from something which was rolling at almost 50% higher than that, it has now come down, and that will mean that HDFC can continue to mildly underperform rather than strongly underperform in terms of business performance. On the loan side, for the rest of the bank, there has not been much of a problem, and therefore, if you assume that their credit deposit ratio gets corrected over the next, let's say, 6 months or so, you should assume that it will become back to business as usual. It should be trading, therefore, at a premium to the rest of the industry, which currently it is not. And consequently, I think you should expect steady growth from HDFC going forward. I would hesitate to put a number on it, because it also depends on where the economy is headed. But broadly, I think it should remain part of your core portfolio.
Okay, getting set then for the market close. I don't know if we still have Vaishali there, if we can get a take on where the market is actually headed from here. But we've done ourselves pretty okay. We are closing in at the high point of the day. About a 0.5% uptick is what we're shutting shop the day with. So it's looking pretty good right now. The Adani names have made a very solid comeback. Look at Adani Ports, that shot up about almost 5.25% right now in trade. Adani Enterprises is also holding up a good 2% in trade as well. But Anand, good to have you on the show. In fact, I'm going to hand it over to Snehi to wind up the closing trades for us.
Well, absolutely. Let's take a look at how the day has ended up for us today. It's looking like a good day of trade coming in for the Nifty 50 at least. 0.6% higher is where we've closed. Sensex also doing pretty well. 0.7% uptick coming in on Sensex as well. You have a 165 point uptick coming in on the Nifty. Advance decline ratio then steeply in the favor of the advances today. So very good move coming in over there. Sectorally, you have Adani Ports, NTPC, Adani Enterprises, SBI, Axis Bank and L&T that have done pretty well today for the Nifty. So these are the Nifty high flyers today. However, what added pressure to the index today was Bharti Airtel, ITC, Hero Moto and HDFC Life. If you take a look at some sectoral winners and losers today, PSU Bank, your top sectoral gainer, led by the likes of AU Bank, Ashok Leyland, Indus Tower, all of these stocks have done pretty well. Nifty Media, Metal, Energy, Bank, Auto, IT, Realty, Pharma. In that pecking order, all your winners. However, what's not done well today is Nifty FMCG, slightly under pressure, 3 to 4% cut coming in on FMCG names also. You have ITC, Marico, UBL, Tata Consumer, Dabur that have ended the day with cuts. Just want to mark some high flyers then very quickly. Good day for HDFC Bank, all-time high coming in. They've reached that 14 lakh crore market cap, so very good move coming in on that front. You had a Granules that was in focus on the back of that US FDA action coming in, so very steep fall in the last couple of minutes of trade. 10% lower is where that stock is ended up. So these are just a couple of stocks that we wish to highlight. But really, as good day coming in for the Nifty, 0.7% uptick coming in, but nonetheless under that 24,450 mark for the day.
If you like this video, then like, share and subscribe to ET Now.